Welcome to this week's look at the state of the New York City real estate market. This is for the week of February 5th through February 11th. We're going to get started, as we always do, with the luxury market. Then we're going to take a look at what happened in the Manhattan market and then the Brooklyn market. And then I'm going to sum it all up for you and give you my thoughts and takeaways, give you a little sneak peek about where the New York City market is at. And let's just say this. Looks like the worst is behind us. Okay. Any questions, please post them below. As always, you can always reach out to me directly at Sotheby's. Let's get started now with the luxury market. There were 21 contracts signed for properties that are priced at $4 million and above. 7 of those were in the trophy category, meaning they were priced at $10 million and above. 10 of those were uptown, 11 were downtown, 16 were condos, 2 were co-ops, and 3 were townhouses. Interesting to note the relatively high number of contracts in that trophy category. Third of the properties that are in that luxury category were priced at $10 million and above, and that's pretty impressive when you think about it. Okay, so the number one contract signed for last week, the Penthouse E at 443 Greenwich Street. It was asking $28 million. It was reduced from $32.5 million when it was listed back in July. And the Penthouse triplex condo has almost 5,000 square feet. It includes 4 bedrooms. It also has a little over 1,200 square foot roof terrace. It comes with a deeded parking spot, which is great to have in Manhattan, and it has an electric charging station. 443 Greenwich Street is a former factory. It was built in the 1880s. It was converted into a 53-unit condo building back in 2015, and it retains some of the original details like large windows, huge shutters, wood beams. Amenities include doorman, fitness center, lap pool, garage with valet parking, a landscape courtyard, and a roof deck. The number 2 contract, also a penthouse, 126 East 86th Street, asking $19,750,000. This is a new penthouse. It is a condo. It is a duplex. It has almost 5,700 square feet, includes 5 bedrooms, 5 bathrooms, 2 powder rooms, 3 balconies, and a rooftop terrace that total a little over 1,600 square feet. This apartment features 11-foot ceilings and a 49-foot great room with open views to the south. A rooftop terrace has a pergola and an outdoor kitchen. Amenities in this new 19-story building, which is called the Arlo Park, are doorman, fitness center, children's playroom, a music room, storage, and a lounge with a terrace. So now we're going to take a look at the stats for last week. The total weekly asking price sales volume, $203,708,000. Average asking price, $9,700,381. Median asking price, $7,250,000. Average discount from original ask to last asking price, 13%. Average days on market, 695. That's it for the luxury market. Again, as I say, nice showing with a third of those luxury property contracts being in the trophy category, and also nice showing with 21 properties going into contract in the luxury category. Any questions, just post those below or reach out to me directly at Sotheby's. We're going to take a look now at what happened in Manhattan last week. We saw a jump in the supply, up 15%, a little over 15%, 318 for the week. Contracts signed also jumped, 238, that's up a little over 13%. And the off-market properties also had a little jump for the week, up a little over 27%, 149 properties came off the market. The supply, 1,119, that is up almost 70%. Now, that seems like a lot, but we're still coming from a very low inventory place. And we'll talk about that a little bit more in a minute, but it is nice to see that pop in inventory. We definitely need it. Contracts signed, 753, up almost 10%. Off market for the month, down 27%, 490. If we take a look at this market pulse, we see that we have shifted out of the buyer's market. Looks like we're in even beyond the neutral market into just reaching into the seller's market. Now, are we really in a seller's market? No, not really in a seller's market, but because this market pulse effectively is about the balance between the supply and the demand, what we're seeing, because we're in such a low supply state, and we are seeing such a kind of relative increase in the contract activity, it is shifting the dynamic a bit. And now it looks like we are moving the needle into it being more of a seller's market. If the supply, however, continues its pace to rise, then we will very quickly not be looking at a seller's market in terms of this chart, because unless the demand were to continue to rise commensurately. But for right now, what we're seeing is that the demand is stronger than the supply is managing to keep up. So we're definitely looks like we're starting to see more buyer engagement. If we look at the liquidity pace chart, 752 as of the last reading. This is for 30-day kind of moving window of contract activity. It definitely is moving up 20% from last month, 13, almost 14% from last year. That's great. And we definitely needed to see this. When I give you my thoughts, my takeaways, buyers, you're definitely going to be wanting to pay attention to this part. There's some good news in there, I think, for sellers. So sellers, you're probably going to want to pay attention to. Any questions? Post those below. Let's take a look now at what happened last week in Brooklyn. So we saw the supply in Brooklyn also rise a little bit for the week, almost 7%. 172 properties came on the market. Contract signed also jumped quite a lot, almost 34%. 146 contracts signed over the week. And the off-market properties down a little over 25%, 62 properties came off the market for the month. We saw the supply jump almost 37%, 661 properties came on the market last month in Brooklyn, and 453 contracts were signed. That's down a little bit, down almost 2%. And the off-market properties also fell 248. That's down a little over 27%. If we look at the market pulse for Brooklyn, we see that Brooklyn is a little different than Manhattan. We see that Brooklyn continues to hold in this kind of buyer's market state. It's holding kind of steady. If we look at the liquidity pace chart, the 30-day moving window, contracts signed for Brooklyn, 442. Brooklyn is in a little bit of a different place than Manhattan. Contract activity in Brooklyn is starting to trend upward after a very long, very deep slowdown. It started back in the summer of 2022. We are just now starting to see buyer engagement. We can see that happening over the last week. But again, slightly different story than in Manhattan. Perhaps this means the worst is over as we head into the spring. Time will tell. Okay, that's it for Brooklyn. Any questions, let me know. So basically, as I said, just to give you kind of, let's sum it up in a sentence, seems the worst is behind us. We could say it another way. We are bouncing off the bottom of where we have been. We went through a very, very difficult year last year, but we are definitely seeing some signs of real improvement in this market as we head into the busy season of 2024. To recap, the luxury market saw a nice Bit of activity last week with 21 contracts signed at $4 million and above. 7 of those were for the trophy properties priced at $10 million and above. 16 were condos, 2 were co-ops, and 3 were townhouses. 10 were uptown, 11 were downtown. If we look at the Manhattan and Brooklyn markets, if we look at the balance of the supply and the demand, we're definitely seeing that both Manhattan and Brooklyn are suffering from low supply, not a lot for buyers to choose from. This will likely begin to change as we shift into a more active spring market. As I have mentioned many times, March tends to be the time when many sellers decide they're going to list their properties. March, April, May are our busiest months, historically speaking. So we may well start to see more supply coming on the market. In terms of balance, we are seeing that there is more contract activity in Manhattan, and the buyers seem more engaged in Manhattan. So we are seeing a bit of a shift in the market pulse. The balance has shifted a bit. We've gone from a strictly speaking, let's call it buyer's market in Manhattan to what looks to be, in the face of it, a seller's market, although we know that is not totally true. It just means that from a balance standpoint, we have more demand than we have supply. In Brooklyn, that is not quite the story. We still have, things are a little more in balance. If anything, we have a little more supply than we have demand, but we did see a little bit, we are seeing signs of life in terms of contract activity in Brooklyn as well. So what does this all mean? If you are a seller, we are starting the busy season. Be sure that if you are thinking about listing, you get your property on the market by March. March is a great month to come on the market because it gives you enough time to really take advantage of the spring market. Historically, as I've said, March, April, May are the busy months. So if you come on the market in March, it gives you those first 30 days to see if you can get yourself into contract. If you somehow manage to do that, great. If you do not manage to do that, it still gives you April and May to make your adjustment, to attract the buyers, start getting offers, and make your deal. Buyers, you've heard me say, we are bouncing off the bottom. Looks like the worst is behind us. So what does this mean for you? This means very likely your window of opportunity is beginning to close. Make sure you're taking advantage of this. Granted, you don't have a lot of inventory from which to choose. You may want to just keep an eye on what's going on in the market. If there are properties you've had your eye on and they've been on the market for a while, then you should be making offers on those. There may be opportunity there for you. Those sellers may be ready to have a conversation. If you don't see anything that you like, take heart. There will likely be new things coming on. Those sellers, however, will likely be less negotiable, and you will likely have more competition. So, just some thoughts on that. I'm always happy to discuss this in more detail. Okay, that's it for this week's look at the state of the New York City real estate market. As always, my thanks to Urban Digs and to the Olshan Luxury Report. The work that they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.